Contractor base is it's a real asset, and it doesn't get talked about enough. Between the builders that we have who build our homes for us, and the GCs and the general contractors and the subcontractors who do our large scale renovations. Large scale renovation would be when we buy a property that needs a substantial renovation. We do it in-house before selling it to you as an asset, as an owner there. So those are substantial renovations. Those are $40,000 renovations on average. And these homes are relatively small. There might be, 1,200 to 1,800 square feet. So to put $40,000 into a home is certainly substantial. And so these contractor bases that we've built up literally over the past decade plus. And these are folks that know that with JWB, they are going to get a tremendous amount of volume, right? This year, we're on pace to start 600 homes. We're on pace to purchase 1,200 homes this year. And we're on pace to renovate, just to do large scale renovations and the ongoing property turn maintenance. We're on pace to renovate over 800 properties as well. And so we are known as that player here in Jacksonville in terms of rental property investing, or in acquiring real estate, or in construction, as a place that drives significant volume. If you're a contractor, and we're also known as one that pays every single week on time, which is really, really important to a contractor. Many times these contractors don't get paid regularly. That's something they have to fight, and it's a big challenge to their business model. So we offer volume, we offer quick payment, and of course, there's a lot of other benefits to doing business with us. So this contractor base, we give as much as we can to make sure, in terms of volume, paying quickly, because one thing we're going to ask for them is to, number one, uphold our standard of construction, which we do. The other thing we're going to ask of them is low prices and volume prices. And volume pricing is incredible for you for two things. Number one, in order for us to actually create inventory opportunities for you as a client, we have to make the numbers work so that JWB can buy and renovate the property, or buy and build the property, be under market value. So then we can then sell it to you at market value. And a big part of that cost structure is, how much did it cost to build? How much did it cost to renovate the property? If we had to pay the same rates to renovate properties or build the properties as your normal homeowner who wants to build a house, or your normal person who's hiring a contractor, we couldn't provide the same amount of inventory for you as a client. So we get significant cost reductions there. But the biggest win for clients long-term is the fact that when contractors come to JWB and they're a part of this incredible volume, and we talk to them about how we need to get cost reductions, we also let them know that these cost reductions are in place for the big projects, the $40,000 renovations, as well as the small projects. And if you're an owner, you're going to have minor maintenance costs that do pop up every once in a while. You're able to get that significant volume-based cost reduction on the maintenance cost on the big stuff, as well as the small stuff. So there's no way that you'd be able to get as low pricing on your routine maintenance, or think about when your property turns over. Those are relatively small renovations. You're able to leverage that. And there's no way that you could pay those same rates if you were to go out there and try to secure some of these contractors to do the work without that amount of volume. Just to put in context, we start over $3 million worth of construction every single month at JWB.
Every month.
So that's some volume, and that helps the short run for inventory for clients, and it helps the long run as far as keeping our maintenance costs down for you, and you get to leverage that.
So as you're saying this, I'm hearing, and this is a guess, right? But like I'm assuming maybe in this one there is no way to hide being turnkey or not turnkey on the GC side, but there is a difference between vertical integration, right? I would imagine that every turnkey provider is saying, don't worry, we got the contractor handled, and they give it to you already remodeled. And okay, so tell me about the difference between not turnkey and vertically integrated when it comes to the construction and the maintenance piece.
No, I'm so glad you asked. So the non-turnkey, the fake turnkey approach is, many times companies will not own the asset. Okay. Then they go and they basically align the buyer and the seller. So they're that middleman there. and the property will need renovations. So they'll ask you as the client to purchase that property in a non-renovated state. Then they will connect you with a contractor that they trust and that they supposedly have accountability and management over to actually renovate the property after you actually own the asset. That is very normal in our space. And again, that is passed off to you as turnkey, but in my opinion, that's fake turnkey. Because what's happened there is, number one, the asset is not renovated right off the bat. You actually own it in an unrenovated state. You're hoping that that relationship between that contractor and that turnkey company is strong, but at the end of the day, getting a renovation finished on time and on budget is one of the hardest things about this business. So that risk is on you, in essence, as the owner. And then, oh, by the way, your money's in play, but you're not earning any cash flow for a long time, right? It might take 2 months, 3 months, 4 months before this renovation is finished. Your capital's been down since day one. And then after it gets finished, then you got to rent the property. I mean, you might be 6 months or a year before you actually see some positive return. So, but again, that's passed off as turnkey in this industry. It's fake turnkey, in my opinion.
Okay. So not turnkey is not getting a completed asset. Here you go when you put money in. Then regular turnkey means getting that. But then there's a difference between turnkey and vertically integrated, which sounds like the depth of relationship with the contractors and that volume discount. Is that where the vertical integration comes into play?
The depth of relationship, I think, can be accomplished by a turnkey company who has done this for a long time, right? I think of other turnkey providers that might have been around for 5 years or so, and they might have the depth of contractor relationships or maybe close to what JWB has. I wouldn't say that that's the big differentiator. I think many times they don't, but you could, right? So we'll call real turnkey is that you have strong relationships with contractors. You sell the asset after it's been renovated. That's real turnkey, in my opinion. The vertically integrated approach would be the significant cost reductions, like you pointed out, because in order to have $3 million worth of construction going on at one time, you have to own a tremendous amount of land in order to be doing a tremendous amount of projects at one time. And so it goes back to that. Well, in order to do that, you had to be planning for this for a decade in advance and putting your money into owning that land well in advance. So that $3 million worth of construction is not something that a typical turnkey company will ever touch. $3 million worth of construction that we start every single month. You just won't see that from the turnkey space very often. But that is what significantly reduces the cost of construction for you in the short run and the long run.
Yeah. And there's something that I've learned on this show is this idea that you buy the property one time, but then you maintain it for the life of it, right? So like those costs that you need to count on for the contractor to come in and fix something will be there forever and will continue. So that relationship lasting a long time is really, really important. And another thing that I think people won't automatically assume is this idea that, man, when there's an emergency, the person that gives you $3 million worth of business a month gets it done, right? Like hurricane, which I know is on someone's mind if they're buying something in Florida, right? Like when Florida's running around, everybody's strapping down their properties. Guess who gets their mouth fed, right? Like coming from the hospital construction industry prior to this, I know that the big healthcare system got our manpower, right? Like the Minute Clinic wasn't getting that.
Exactly. Yeah. I mean, and this is part of that relationship we build with the contractors up front when they come onto our team. Hey, listen, we're going to give you more volume than you probably could handle. That's why we're going to give it to you over time to make sure that it's the right fit and that you can handle it over time and build you up over time. We're going to pay you quick. We're going to pay you every single week. We're going to ask for cost reductions and we're going to be treated with high priority. So, when we do have major storms, those contractor teams in the week before, when we have that heads up that a storm is coming, we're removing all of the dumpsters. We're tying down whatever needs to be tied down. We're making sure we're in the neighborhoods to make sure that our residents are taken care of and we don't have loose debris in places. Those things, I mean, that's not something people talk about, but that's really important to do, to taking care of residents and of course, protecting clients' properties. And then after the storm hits, you can't get a call through to a roofer if you've ever been around a major storm, right? JWB has that direct line. We are able to prioritize our clients' property so that in the event that there is a significant damage or a significant event that causes major damage, we've got those contractor teams in place. And of course, our team internally is working to make sure that your assets are protected as well.